All right, checking my microphone here real quick. Hopefully you guys can hear me. If there's even anybody in here, let me know if you can hear me. Echo, echo, echo. All right. Let's turn this off. Boom, boom, boom. Get this off my screen. What's going on, everybody? Beers and Bitcoin, another Friday night. Sorry I missed last week's stream. Parents were in town and everything. They were here for like 8 or was it 10 days? I don't know. It was a while. They were here for a while. My mom is a lot to take. So now that they're back home, we're back to our regularly scheduled programming, and my new light came in. So I finally have light on this side of the room so that my lighting isn't all jacked up for once. Yay. Tonight we're going to crack into, first I'm going to have a beer. And I'm going to try this Yingling Flight. I don't really know what it is. Apparently it's like Yingling's answer to like a Michelob, and well, you know how Anheuser-Busch is. So we're going to crack a Yingling Flight tonight instead and see how this tastes. It's actually not too bad. It tastes just like regular Yingling. So old man beer with low carbs, right? That's what I'm on now. So yeah, it actually doesn't taste too bad. It doesn't taste any different than normal Yingling. Fun fact, until I think it was earlier this year, Yingling nowhere in the state of Missouri was sold because this is like Anheuser-Busch state. And like before Anheuser-Busch did the whole like crazy wild thing with that and had the whole boycott or whatever, just before that happened, they started selling Yingling in Missouri. So yeah, not too bad. I like it. Anyway, we got a lot to talk about in this stream. A lot has happened. I haven't even really had a chance to really take a look at the markets that much. So I'm pretty much going to be going over it with you guys. I haven't really looked at too many charts, except, with the exception of like the daily charts and stuff for quite some time. So we're going to take a look at that. We're going to go over what my thoughts are for upcoming FOMC next week on Wednesday, the 26th, which no one seems to be talking about very much. There's been like no talk about that at all. We're also going to go over Venom results from the last, I think it would be 2 weeks because I missed last week's stream. So we'll go over the last 2 weeks trades from the Venom Algo and legacy market stuff. You know how we roll. So we're about to get into it. If you're new here, make sure that you smash that like and subscribe button. Helps me out. And check all of the information down in the description below. I'm doing a special promo. Good buddy Cam Paulding actually did a video on YouTube about the Venom Algo and how to set that up on the new BingX exchange that Astrobit opened up API connections for. And in celebration of opening up a new KYC exchange, KYC free exchange rather, on the Astrobit platform, I've got a 50% off for 2 months. Code down in the description below. The code is Bing50. So if you want to try out the Venom Algo for half off for your first 2 months and let it do its thing for a little bit, there you go. Now you guys can get a shot. And it's, not super expensive or out of reach for more of you guys. What's going on, AC Trades? What's going on, Riley? Good to see you guys. But yeah, I guess we'll go ahead. We'll dive right into the charts here. I'll take a look at Bitcoin and just kind of go over that stuff first. And then I'll take a more closer look at, like legacy markets and things like that. Also, if you guys can retweet the YouTube link and stuff, like share that out wherever you guys are. That really helps me out. Let's get more people in here. I know, again, I'm sorry I missed last week just with the parents in town. It was just, I had too much going on. So let's switch over to here and here. All right. So let's get this going here. Let's get it cracking. Let's start with this weekly chart and see what we got going on here. Not really too much. It's just pretty much leveled off after we had that really big week. I guess about a month and a half ago now. So yeah, on the week of 6/19. So quite a while ago, about a month. So, and it's just pretty much leveled off. This is very, very reminiscent of this same kind of price action that we had back here, back in March, where we just had a lot of just really stagnant, very, very close together open and closes with a lot of volatility in the middle. It's looking very, very similar here. Just lots of really, really close together open and closes with volatility intra week. And we're just kind of getting the same thing here. Now, obviously, that doesn't necessarily mean that we're going to have like a huge, like falling wedge here and another leg up. But generally speaking, in terms of, just price structure, we had a first leg, we had a second leg. I don't really know if this would be like a last leg up or not, or if we're just kind of tapering off here. Kind of too hard to tell at this point, but obviously, like 30,000 we already know 30,000 is a very, very key resistance level. That's kind of what we've been trying to flip now for a few weeks. So, we're still working on that. So let's come down to a daily chart and see what we got here. I did just before the stream, I did reorganize some of these key levels that we have. I have not pulled the trigger on any prop firms yet. I'm planning on doing that probably next week, either on Monday or Tuesday. I'm planning on maybe starting 1 or 2 challenges just to get going. I just, with so much going on with the Venom Algo and my parents, and it's summertime and the kids home from school, I just have not had very much time to trade. I normally don't in the summertime. Normally the summertime is when I just kind of like lay back, chill, let the markets do their thing and, enjoy life, go touch grass. So I'm probably going to be starting to get into that stuff later on next week. But I'm actually really looking forward to it too. So we'll see. So it looks like our range lows were down here at 29.5. We didn't actually sweep that. If you zoom in really close here to the bottom, this wick that we got most recently, we did put in a new July low at 29,512. So on this Binance chart, at least, we were about $12 short of sweeping the actual range low, which was directly at 29,500 here. So we technically didn't sweep it yet, but we did recently put in that new July low. July high is up here at exactly 31,500. So kind of crazy that our range low is exactly 29.5 and the July high for right now is exactly 31.5. Technically, you could call that the new range high. I normally don't do that. I normally just kind of label those as like a deviation. So our previous range high was swept here. This was our one at 31.5. This actually needs to be adjusted. This isn't 31.5. This is 31,804. So that's actually a different number up here. But yeah, so that's kind of where we're at now. And the price action, for the most part, we've just really, really been hovering around in this major yearly support and resistance level. This goes back quite a ways, guys. That's why it's a yearly resistance level. I mean, this goes back way back to here around this time in 2022. So that's why I've dubbed it as a yearly support and resistance level. If we are looking for another leg up, then this is where I would be looking for that. That was just based off of a very basic fib pull of this initial move. And, that's basically just right above the golden pocket here. Okay. So that's pretty much how I got this area. It also lines up very, very well with this previous level of support and resistance. I literally just copy and pasted the box and moved it over. So this resistance level, that's obviously the next logical resistance, around 35, just above 35K. So that's what I would be expecting if we are indeed going to be moving up from here. But for right now, it's just, the price action is just looking weaker and weaker. If we bring up our volume here, Our RSI is just really stagnant. It's just sitting in the mid range. That's not a good place to be. There's just kind of no trend now. Even our MACD here on the daily, just no trend, very, very little momentum, very, very little volume through here. And that's really what's contributing to these intra-weekly, just really big spikes and volatile moves up and down. Michelob Ultra Pure Gold. Dude, though, I'm not going to lie, man, those are actually really, really good. We just refuse to buy any of the Michelob and Anheuser-Busch stuff anymore. We're keeping up with all that, but those are awesome. And if you like those, you'll probably like the Yingling flights too. If you like a lager, they're pretty good. If you want to turn Venom into a possible algo that can trade prop accounts or an indice or Forex, let me know. I'll hook you up. Yeah, so that's actually something that I've been really, really looking forward to. I think Astrobit is going to start adding implementations for that. And I know that there's some services out there that will like connect your algo on TradingView and have it like translate those signals to like an MT4 account. I know that there's some kind of like website search, some kind of software service through a website that does allow for that. But there's going to be a lot of things. Yeah, it's called Pine Connector. Riley Smith got it. It's called Pine Connector or something like that. And it like translates either the code or the signals or whatever from PineScript and TradingView over into MT4. But yeah, that's something that I'm definitely going to be looking into. But my problem with that is I would be wanting to do it for Forex. And my issue is that a lot of Forex data providers don't provide volume data, and that might pose a problem for some of the indicators that the algo uses. But we'll get more into the algo stuff in just a minute. Let's come down to this 4-hour chart. This is pretty much the range that I have. And this is what I was talking about earlier, how we had that deviation just above our 4-hour range highs. Okay, so this was our deviation. And we've just really been hovering around the low end and the bottom half of this range for quite some time now, basically since the 14th. So literally a full week now. We've just been like hovering in this very low range here. So just really not awesome price action, really big swings and wicks in both direction. To be honest, I'm kind of glad that I haven't really been trading Bitcoin that much, because this is just not, it's just not looking good. Like this isn't the kind of thing that you normally want to be trading unless you're like really digging down into like 5-minute time frames, and catching some of these moves, down at local supports and just playing on scalps for some of these. But in general, on these higher time frames, even on the 1 hour, I mean, like that's very, very choppy. Like you short here, boom, you get stopped out within 10 minutes or a couple hours. As soon as you walk away from your computer, you relong it or whatever, and then it comes right back to your entry. You long here, it nukes on you. This is like very, very especially choppy price action. Very hard to read here. Even the volume through here is extremely choppy. Not a clear read on momentum. You get a pop and then it levels off. You get a pop, it goes flat. You get a pop, right here again, we got a pop, it goes flat again. Very, very difficult reads on this price action. And I believe we look at over here, bring it up. Where is it? So the hell? There we go. Monday. What the hell? I want through the whole week. Where's the whole week? Give me the 21st through the 28th. There we go. All right. Monday, not too much going on. We get our manufacturing numbers. That's about it. Tuesday, 5-year notes, red books, not much going on. Wednesday is the interest rate decision. I haven't really heard anybody talking about the FOMC meeting, because we get the rate decision at 1800 hours, which I guess is like 1 o'clock my time. And then like at 1:30 or whatever, that's like, when they do the press conference, that would be 2:30 Eastern time. So, and the press conference, that's where like the really good information is, right? Like you get a couple of those people that are always there that ask the dumb questions. And then normally like Market Watch and Reuters and what's the other one? There's another couple ones that like they normally ask like really good questions. So, I mean, let me know what your thoughts are. Like, what do you guys think is going to be going on for this FOMC meeting? Personally, I think that they're going to hike again. They paused last time and then they just like, they didn't even call it a pause. They just said that we're just going to choose to not do anything. They just chose inaction. So I'm really kind of wondering if they're really going to stick by their guns. They said, okay, we're going to do 50 more basis points in total before the end of the year. They didn't do anything last meeting. That would mean that before the end of the year, they would probably have to do one of those 25 basis point hikes this meeting, maybe do nothing next meeting, and then do one right before the end of the year. So I don't know, or they're going to skip this meeting and then do another 2 back to back or something. I really don't know. So let me know what your guys' thoughts is on that. This is going to be a really hard one to call. And in terms of just hype for the FOMC, I've just noticed that there is just no hype for the FOMC. Like no one is counting on this at all. No one's really making predictions about it. I don't hear anybody on crypto Twitter talking about it. Nothing. Which is really weird because it's literally next week. So maybe on Monday or Tuesday or something, we start hearing stuff from other people on social media. But for the most part, it is eerily quiet. Normally, there's a lot of news and a lot of speculation and a lot of hype about this at least 1 week before. Normally, it's 2 weeks before. So it's really, really weird. I'm thinking raise, pause, then raise again. Yeah, see, that was my thinking too, is like, they didn't do anything last meeting. So I'm thinking maybe this meeting they do 25 and then they stop again after that, the meeting next time. And then they do another 25 and then like pause for like the rest of the year or something. So I don't know. Yeah, I agree that doing them back to back would probably not be a good idea at this point because they're trying to moderate the economy. Like they don't want to break anything. So, I mean, has inflation come down? I mean, like, month over month, I mean, yeah, it's come down. Like when you start looking at the numbers, it's like, oh, okay, they came down 0.1% and 0.2%. It's like people are going crazy over like a 0.1% month over month decrease. But we're year over year, inflation is still like 8.88% high. Like it's still way out of control. And they've been hiking now straight up for like a year and a half. So, if inflation still hasn't budged after like 5% increase, like 5,000 basis points, 500 basis points or whatever they did. I mean, like clearly, they need to be doing more. But yeah, so after that on Thursday, I think next week we're going to see a lot of volatility. We get continuing jobless claims the day after. We get durable goods, continued jobless claims, pending home sales. So we're going to get a lot more information next week, especially on Wednesday and on Thursday. In terms of like legacy markets. So if you're a Forex trader and you're craving some volatility, next week is definitely going to be the week to do it. And then it looks like on Friday, we're getting our core personal consumption numbers. So those are really important, and employment cost index. So that's something that not a lot of people pay attention to, but the employment cost index is really important because that basically is a lot of statistics that combined basically measure how expensive it is for companies to keep people employed. And that directly relates to like our wages keeping up with inflation. Like a lot of people, you'll hear the term like wage price spiral. Those are the numbers that they look at to define, are we heading into a wage price spiral or not? So that's actually a pretty important index. Personal income is also going to be coming in. So there's actually quite a lot of stuff going on next week. So next week, I'm glad that I'm, getting back into the game here, because next week it's looking like we're going to get a lot more of that that volatility here. So that's really awesome. Are there charts that you guys specifically want to see? I know that I already did Bitcoin and stuff. I can go over Ethereum if you want, but normally the chart looks pretty much the same. Yeah, I mean, it looks almost the same. Like if you bring up two side by side here, this is Ethereum. That's the dollar. Let's bring up Bitcoin here. 1 hour, 1 hour. I mean, looks pretty much the same to me. Everyone's like, "Ooh, chart ETH," and it's like, if you chart Bitcoin, you're pretty much charting Ethereum. Like that, they pretty much always have the same structure. It's just that Ethereum always has its levels a little more well defined. So like if you look at these bottoms here, if we take this off the screen and you really look at the bottoms here that we had most recently, look at how flat and well defined Ethereum is. But over here, you've got these like, lower lows and funky, funky lows, where over here it's like pretty much flat. So that's pretty much the main difference, is like you don't get as much volatility on Ethereum, but you still, clearly, as you can see from this, you still get the volatility. But normally the patterns and stuff, if you're like a pattern trader and stuff, the patterns are a little more well defined. So coming back here to the fourth and everything, Bitcoin looked completely all jacked up, but over here on Ethereum, there was a really nice head and shoulders play here that you could have caught. Like this was like a really nice lower high. This was the short. And that was a really nice play because you could have closed right back at equal lows. So like while we got this really nice, well-defined head and shoulders here, we didn't get that on the same days in Bitcoin. Instead, we got that. It's just like a clusterfuck. So I can understand the appeal of like a lot of people trading Ethereum more than they're trading Bitcoin and stuff. Here's another interesting pattern that we had, and it doesn't look like we had this on Bitcoin either. Well, we kind of did, but it was way less defined. See like how well defined on the 12th back here, like see this, you guys know head and shoulders are like my favorite freaking play, right? Down move, consolidation, down move, consolidation, big throw under, higher low, and then that's the blast off right here. And you got that huge, nice head and shoulders move. On Bitcoin, you kind of got that, but it looked like really wonky here. Like, I don't know as if I would call that a head. Like, I don't know. That doesn't really look like a head and shoulders to me. This looks like a head and shoulders to me. So this would have been a really nice play here. But I mean, you guys know I love head and shoulders plays, especially on like 1 hour time frames. They normally have very high probabilities of playing out. You just got to be able to spot them correctly. As long as you can physically spot them and you can nail those higher lows, if you've got the balls for it, and normally they work out pretty well. You might have been able to call this one in here too, but I don't. Again, this is one I don't really like the structure of that. But this would have been something else I would have been watching. That would have been your higher low here to take a long on, but I digress. Come over here. Yeah, there wasn't really my break this and we bull run is still sitting here. Is that on the daily chart? Yeah, it is. So this is like my overall macro daily chart situation here. This box is still here. This is our overthrow high. We hit our resistance here, and that's pretty much. We still got pretty much the same thing going on here. Like not really too much has changed. It broke out of this triangle, but it was like a very lackluster breakout. And it's just continuing to grind sideways. So at this point, I really wouldn't even call this a triangle at this point. It's pretty much just really, really, really range bound. So kind of disappointing. But anyway, let's go ahead and let's take a look at some other stuff here. We're going to take a look at the dollar. So interesting here is that the dollar, for the most part, after this drop, the dollar for the most part has been pumping, and Bitcoin hasn't really been doing too much of anything. It's pretty much just sitting flat. I've noticed lately that the dollar has been leading and then Bitcoin has been delayed. I don't know if you guys have noticed that too, but that's kind of been a thing. Where, you know, like this move, right? Like Bitcoin was just like the dollar here was just dumping and dumping and dumping and dumping. And it was like a couple days of the dollar dumping before we started seeing the reaction on Bitcoin. So you know, I don't know, maybe we're due to see more downside on Bitcoin because Bitcoin is delayed by a few days here. I don't know. But that would be my guess with lately how this has been playing out. I've been waiting for a tap of the lower portion of this box here that goes back for a very, very, very long time. And this is very, very key level, all the way back here into the 90s. I've been waiting for a tap of this lower level of this box for a very long time. And we definitely got a really nice bounce off of that. So I would be expecting that move to continue to the top side. If it does, and we break back in to this triangle, do you already see where I'm going with this pattern? You should. It's like my favorite pattern. First of all, if we break back into this triangle, the triangle is invalidated. You never want to see the price action move after the price action breaks out of a pattern. You don't want to, especially like triangles and expanding flats and stuff. You don't want the price action going back into that. As soon as it does, it's invalidating that pattern. I don't give a shit what anybody says. We've seen this on Bitcoin all the time where we get something, a really nice triangle like this, and we get a breakdown, and then we get one of these. And it's like, oh yeah, well now it's invalidated. It's like, no, it was as soon as it broke back into here, this was invalidated. And you have to look at something else. You have to look at your horizontal levels. You know, and that's pretty much it. But yeah, if we see something like this, what do we got? There it is. Really nice neckline there. And that would be a really nice breakout. And a head and shoulders. That would be a very nice head and shoulders reversal here. So that's personally what I would be looking for at this point. There was a lot of patterns that have been going on in here in this very long consolidation that we had. I know that for weeks, I was talking to you guys about this possible Adam and Eve. Okay. And I was waiting and waiting and waiting for this to turn into a cup and handle. Unfortunately, on this candle here, we broke down past 50% retracement, which invalidates a cup and handle. And that also invalidated the entire, when we made this lower high, that invalidated the entire larger Adam and Eve pattern. So the Adam and Eve, that got invalidated. This cup and handle, this invalidated that. So that got invalidated. Now we've got this triangle here, which is like the last pattern that could possibly be here in terms of like, you know, an overall long-term pattern. And it's really looking like this might, you know, maybe stagnate here and move back up. As soon as this moves back up into this pattern, now that triangle is invalidated too. So very, very, very tricky trading here. On the dollar chart, this obviously directly relates to those of you guys that are Forex traders and stuff like that. So, you know, take this move with a grain of salt. If you're bullish on anything right now, you do not want the dollar continuing to break back above, you know, like 102 or so. And if it does one of these, you need to be very careful here. If you're bullish on anything, because that would be really prime for like a really massive reversal. You know, we're talking back into this 105 area up here. That's probably where I'd be expecting would be equal highs from here. Okay. About 105, 104 and a half. So that's pretty much what I would be expecting on that. If that ended up playing out, but that's definitely something I'm going to be watching. The dollar has been really tricky lately. So definitely make sure that you're taking this chart, especially the daily chart, into an account. When you're making trades on, those 1 hour and 4 hour time frames. If you're more of a swing trader, especially on Forex, if you use like the hourly chart and you're not cranking up the leverage to like, 50 to 1, 100 to 1, 200 to 1, or whatever, and you're a Forex trader and you're playing on those higher time frames, that would be the setup that I would be watching and waiting patiently to see what happens. So let's take a look at our S&P. So currently, I know that I had this big wedge drawn, and this was another thing. So like we got this tiny like teaser of a breakout, broke back down, another tiny teaser of a breakout to form an equal high, broke back down a little bit, made a higher low, and continued up to new highs today. So this has been also just a really kind of like devastating, holy crap, if this ends up, invalidating such a massive, rising wedge, which is bearish. That's really huge. Again, next week with all of the consumer numbers coming out, the jobless claims coming out, the FOMC, making a rate hike decision. We don't know if they're going to pause or do 25 basis points, or whatever. We don't know yet. This could be like the biggest fake out in history, and this ends up just, completely breaking down into the pattern here. And this was a throw over, or we're going to see some kind of a support retest here and continue higher. This would probably be the more likely scenario, in my point, is invalidating the wedge and then moving higher at this point. And the reason why I'm saying that is because you can't always count on an invalidation, but the fact that we've had so many high time frame candles close above this pattern now tells me that this pattern is most likely invalidated, and it wouldn't be in your best interest to count on this playing out. The chances of something like this happening at this point, in my opinion, are very low. Okay, now, again, in such a massive move upwards, if we did see something like that, again, it would be one of my favorite patterns. So again, something I'm going to be watching, obviously not something I'm counting on, but definitely something to take into consideration. We did have a couple of nice toppy looking candles here. If we really start digging in and looking at the candlestick formations, overall, like that's pretty bearish. Okay. That's not looking good. So like, from this previous 4 hour candle, it was bought all the way back up. And then the very next 4 hours later, in the day today, it just put all of that back and then closed at the low of the previous candle session. So not really super tricky. Again, most people are playing this on like the 15-minute time frame. And everybody has been buying into dips here. For the most part. So another thing that you want to look at is the FANG. So the FANG finally started flipping over. Finally. We just broke down through this support today. I just labeled that red. And this is our major support. Okay. And that would be like high time frame. That's like your high time frame support there. Why didn't that show up on my daily chart? What's going on? Should be on my daily chart like that. There we go. Yeah. So that's your overall major support here. This was a throw over, okay, of that major resistance before we saw that huge move to the downside in 2021. And now, this is what we're kind of dealing with now. So there aren't very two similar like price structure things going on with this compared to here. It's kind of its own beast right now. But finally, it is finally starting to flip over. I mean, we've had tons of bearish divergence going on here since last month. Same thing on our RSI. I've been watching this closely. I did take a couple shorts on this. I won one, I lost one, and I haven't taken any like shorts on like FANG ETFs or anything since. And the reason why is because sometimes divergence takes so long to play out, especially on like legacy indices when you're looking at these high time frames. I mean, they can take months to play out. And just like as you saw here, like this has already been a month worth of price action of this divergence playing out. It's just too risky. If you're looking for like quick gains or something, this would be the type of thing that, you would have to be like dedicated and have super high conviction in that trade over a very long span of time. And I just really didn't, even looking at this weekly chart, we didn't even get the bearish engulfing candle here. It's a bearish candle, but we didn't even get the engulfing candle here. So, while we're overbought on the RSI, the volume is still very bullish here. All of our other indicators are still super bullish here. So, seeing some kind of a pullback, yes. Calling for some kind of like new lows or something like that, I absolutely don't think so. I think the biggest kind of pullback that we see is probably down to here at like 63.20. Now, wow, that's a massive dive from here. In terms of like Fibonacci, it's really not that much. That's 20% dip in the index. But I think that would probably be a logical point, or probably more what would be more likely here is you've got confluence here with this support level, the 236, and these highs. So this level somewhere between like 7,000 and like 7,300, that's probably more likely than, diving way down deep into like 382 territory. And if you start, if we did something like that and did not get the bounce there, then that would be really bad. Like if you made a lower high compared to here on that bounce, that would be, I would probably say, okay, like warning, that's probably really bad. And if that was happening on the FANG index, the S&P 500 would be getting absolutely hammered. So that's probably something that I'm going to be looking at as well. But for the most part, it's pretty much back to, like buy the dip season in terms of legacy stuff. We know that we're approaching new highs. We know that everything is starting to rocket off. We know that the general consensus in terms of the mainstream media is, hey, we're probably not going to be seeing a recession, and stuff like that. I mean, technically, our economy has already been in a recession and we're starting to head out of it. If the Fed is starting to not hike rates as much and start pausing, then that tells me that they've pretty much got it under control and that they are hoping that wages end up catching up with price, of goods, because the price of goods is going to start to come down as they start, as the inflation starts coming back down. That's when your dollar ends up, being, have more buying power. That's when you start seeing that DXY chart start coming back down to where it's supposed to be, and things start to moderate. If that's really what's going on, and we're pretty much through the brunt of it, then I would rather be late to enter here and be buying some kind of a dip, if we even get it, then completely sitting out on the sidelines. Like for the most part in legacy, I've been largely on the sidelines. For the majority of this last move here, I was playing around a lot. Like if we come down to the daily chart, I was playing around a lot in all of this stuff in here, and I made pretty good money. But largely for this move, I've been staying away. And the reasons have pretty much remained the same. Is through this move, especially on this daily chart, our volume has just been consistently lower and lower and lower. And I didn't really have too much faith, especially from here, on this last move up. Once we stalled here, this is pretty much where I got out. And I said, okay, I'm going to wait until, we have like clear direction. Obviously over the last, like month or so, I haven't really been trading indices and everything because of that. So I kind of just missed this entire move, and that's fine with me because I've been making money elsewhere. So, now what I'm looking at is, okay, 43.25, that's a key level. If we get that, that's definitely a buy. If we get 44.15, that's definitely a buy on the smaller time frames. If we get our trend line here, that's definitely a buy. And that's also in the area of like 44.50. That would definitely be a buy for me. So things are feeling really bullish. Dow Jones, NASDAQ making higher highs, Bitcoin closing bullish even on higher time frames. Yep, absolutely. Every day the past 2 weeks just keeps making higher highs, small correction, then retracement to the upside. Yeah, exactly. Which is why I'm already like, for the most part, over the last couple of weeks, I've been switching my bias to generally bullish. Now, when it comes to Bitcoin, Bitcoin's a little bit of a different story because Bitcoin has already been basically in up only mode, more so than the legacy indices for the entire year. The legacies since the beginning of the year were really choppy, right? So like we started off here and we came back and retested those previous yearly lows before taking off. But then when you look at Bitcoin was pretty much up only and it never retested those lows. So Bitcoin's been definitely more up only and buy the dip than indices have overall, which makes me a little wary about Bitcoin's overall macro, like where it's at versus the S&P 500, because we all know that the S&P 500, it gives no fucks. It'll just grind up and have very small retracements and keep grinding up for months and months and months on end and years on end. Like we know that, and the structure plays out a hell of a lot differently than Bitcoin does. As much as people like to say, oh, you know, Bitcoin and the S&P, oh, look at, you know, they're super correlated and everything. Yeah, nothing about Bitcoin looks like this. Like, I mean, that's just, it's basically up only with very small like dips and stuff in between. And most of the time, any kind of major dip that you see in the stock market, you're buying, like through here on our last major run up, right? In 2013, look, dip, you bought it, dip, you bought it, dip, you bought it, higher low, higher low, higher low, higher low, higher low, higher low. And then finally you got a lower low. This was the max bid opportunity. And then you had that super sweet V-shaped reversal here. So that's, stock market and everything, especially indices, if you're trading indices, work a hell of a lot different. Crashes like this are very, very random. Normally that's a black swan kind of an event, or it's like some kind of an election year thing. And then you see larger, more expanded corrections that are really choppy like this, which normally indicates that, for a period of time, like from 2019 to here, it was just printing money, printing money, printing money, and the entire economy got overextended and it needed to correct itself. So that's pretty much what ends up in here. But I did not like this very, very sloppy trend break that we got. We were really fighting the end of this trend line, which is why I drew new trend lines for a rising wedge. But I mean, it just is pretty much completely invalidating that now too, which is good. I mean, that's bullish and everything. It's great for my IRA. It's great for my holdings. It's great for my stocks. It's great for everything that I hold, because in terms of like how I trade legacy stuff, it's mostly in my IRA. And it's pretty much just dollar cost average and buy and hold for the very long term. So that's kind of my strategy with that. I don't really, I don't trade options. That's not my thing. If I am going to actively trade, it's either layer one, like majors like Bitcoin and Ethereum, and like major like layer two altcoins and stuff like Matic or Avalanche, Algo, whatever. And then Forex. Like that's pretty much it. And I haven't even really been trading Forex too much recently. I need to get back into trading Forex. I'm probably going to start getting my head back in the game for Forex. Let's see. What else can we take a look at? US 30. Man. Austin, I don't know how you trade this shit, man. I mean, this is just, like this daily chart just looks terrible. It just looks flat as hell. Man, it's really having a hard time breaking this level here. This 3,500 level is like a friggin', it's like, we are Sparta. Like we just does not want to break through this. Jesus Christ. I mean, this level is just like, ugh. It's, you know what this reminds me of? This reminds me of the fucking gold chart. Have you guys seen the gold chart lately? Bro, it's so bad. Let's use the, no, that's Gold Corporation. Let's just, yeah, we'll just use this. That's fine. Gold is just like, it's like 2000 is like, we are Sparta. Like every time it gets up to 2000, it's just like, get out of here. Like it's so funny. Anything around 2000 is just like, nope. And it's like this, it really reminds me of this US 30. It's just like every single time it gets to like 3,500, it's like, no, go back down. So, and that's, we'll see. And that's really good because if you're a breakout trader, like this, that's like max opportunity, right? Like if you're looking at the daily chart here and you're like, okay, clearly right here, 34,800, 3,500, that is like absolute max hardcore resistance. And like for gold, it's 2000. If you're an options trader, or if you want to trade options or just like buy puts or whatever, and just like do some basic options trade for quick money, those would be the ones to buy, is like be buying the calls for like way higher, because like when those break out, like when this breaks out, this is going, I mean, this is just going to absolutely be a monster. Like this is going to go to, 5,000, 5,500. It's going to absolutely be massive and rocket. And the same thing would happen with gold. The downside is that gold and these indices would not obviously do that at the same time. If gold ended up breaking out from 2000, it would just absolutely destroy the value of the dollar. Like the DXY chart would just, it would just go straight up and it would just nuke everything. Which is why I think there's a lot of big hedge funds and stuff that are just like really selling the fuck out of gold to try and keep it from breaking out. But I think it's inevitable. I think eventually gold breaks out. And if it does, this like massive overall bull run that basically every single indice has had for a very long time is going to come to a screeching halt. But that's like the super bearish view, right? Like it doesn't really look to me like gold is going to break out from here. I mean, it's been trying to break 2000 since 2020. This is almost 4 attempts now at 2000, at breaking out of 2000. And it's just not looking good for gold here. I mean, we barely even broke through these highs previously, and that was all the way back in 2011. So Golden, you broke up with, oh man. Yeah, 2 wiki. Yeah, especially, yeah, on the lower time frames, it's like kind of ridiculous. Like this is the kind, yeah, see this? This is exactly why I don't trade gold. Like look at this. What is this? Everyone's like, oh man, crypto is so volatile. Like, really? Have you ever tried to attempt trading gold? It's almost worse than Bitcoin. I mean, like, look at this nonsense in here. Like, there's just too much noise. Like, this is why for legacy stuff, I really only trade like higher time frames. Is like, I can't deal with this. Like, this is just too much. Like, it's like an everyday thing. Like, it's just way too much. I just can't deal with it. This is why I don't trade gold unless I'm like trading it like on a daily time frame, like very high time frame. This is a very clear trend here, and I'll trade it on a high time frame or whatever. But yeah, no, like with the exception of that, like here on gold, it's like, oh, okay, we're here. It looks like we're retracing. We hit a clear resistance here, even if this is hidden, okay, and it's like we're only showing that on the weekly. Clearly we've got a nice order block here. That's resistance. Okay. This order block. Okay. That's our resistance. Okay. Like this is pretty much the level that you don't want to be losing. That's like your next major support. So that, okay, somewhere between, you know, let me turn the magnet off. Somewhere between here and here is like your max value opportunity to be adding to any long position. But as soon as you break this blue line, that's not good. You'll probably be looking for equal lows here, or whatever. So on the higher time frame, it's not that bad. But I mean, like playing this on a 5-minute, yeah, I don't know about all that. That's crazy. But yeah, let's go ahead real quick. Let's take a look at the results from Venom Algo real quick. I want to go over this. I believe I should be going over results from so from the 10th or the 9th. So basically from here. Wow. Okay. Yeah. So quite a bit to go over here. So from the 9th, nothing. Wait, were we already long? No, we weren't. We were staying flat. It stayed flat from late on in the 6th all the way through here. Took short. Kind of closed a little early there. That's weird. This is going to have to be something I look into. That's really weird for it to like not ride that all the way down. There's very little price action here for it to long, but a win nonetheless. Took a long here. I would have been sweating balls on this long. It looks like this stayed underwater for quite some time. Got into profit, immediately reached its entry, acted as resistance. That wasn't good, but then it really took off here. It's looking like this is where it ended up closing out right here. That's probably because the stop loss moved up into profit. So it ended up taking partial profits here and then just closing out the whole position. And then it stayed flat, didn't short here. That's something else I'm going to have to look into, is why it didn't short, at least, you know, somewhere in here. So that's kind of odd. I'm going to look into that. Shorted here. This trade also had some pretty significant drawdown, but still was a winner nonetheless. This came back for a win. Took a long here, really awkward long to take, but it was like a nice long. That was a good bottom. And then it shorted here and we're in drawdown. So it took another win here, and I'm not going to bring the indicators up on screen, but this especially, I'm going to be looking into these past couple trades that it took. Some adjustments might need to be made, because I don't like that it longed right here in the middle of a move. And I really don't like that it flipped short right here in the middle of a move when otherwise this would be in profit right now by about 1%. So what was this? 1%. That's not bad. So I mean, it would be sitting in profit, but I mean, it's probably not sitting in terrible drawdown. It's probably like what, 1% or something? 0.5%. It's negligible, whatever. It looks like a lot on the screen. When you start doing this on the screen and you start like making the candles all super big and crazy and everything, it looks like it's way more than it is. But this is a 5-minute time frame. It's like literally 0.5%. You know, even if you're trading with 5x leverage or whatever, it's, you know, a very small loss, like 2% or 3% or something. But overall, I mean, not that bad for the last 2 weeks. It stayed pretty much short, or flat through a lot of this chop, which is what's designed to do. When it's just really chopping really, really badly and just doing really crazy shit like this, you can see that on these crazy moves like this, it's meant to be catching those, right? It's meant to be catching really volatile moves like that. But and that's why I'm really questioning this long, and I'm really questioning not that short. This short was a winner, but I'm really questioning this short here. I don't understand why it did that. So I'm going to have to go back and look at the indicators on this. But again, you know, being as you know, transparent as possible, you know, giving you guys the results, going over them. You know, we'll bring up these trade results here. These go back, I think, to last month. So, or no, I believe it's 60 days for 5,000 candles on a 5-minute. I believe it's like 60 days. It's like 2 months. Max drawdown 4%, net profit 37%, profitable almost 90, profit factor 6.5, 45 trades, not bad. We'll go into the performance here. We'll take a look at our Sortino ratios, see how these have kind of adjusted. Sortino ratio is at 3.2. That's fantastic. Really, really, really good. Its open P&L is down 0.5%, whatever. Let's see, net profit. So it's one more longs than it has shorts. Max drawdown 4.16, buy and hold. Sharp Sortino open. Okay, so average winning trade 1.57%, 1.44 on longs, 1.74 on shorts. So the shorts have been on average more profitable than the longs, which is weird because we're in a bull market. I don't ask me. That's weird. Let's see here. What else we got? Average losing trade 1.76%. So wow. So the losers on the longs have been extremely tiny, less than 0.5%, but the losers on the shorts have been larger, almost 3%. And the max stop loss on spot for this strategy, it will never lose or close more than 3.5%. I have it capped at 3.5% loss on spot, which is why the the total drawdown or whatever is so low. It's like 4%. Largest winning trade was a long for almost 6 3/4. For the shorts, the biggest was 5.5. Those are pretty big wins for this. Largest losing trade was 3.81. So that like closed out on that. If it wasn't 3.5%, it's 3.8. That tells me that it was like a really volatile move that like fucked up that loss right there. But in general, for the longs, average losses, the largest losing trade is barely over 0.5%. So very, very small. Oh, look, no margin calls. Take a look at the list of trades here. That's pretty much where we're at right now. So this one was pretty much break even here. Wait a minute. Entry long. Is that long? Yeah, this was basically break even. Very, very, very tiny loss here. Win. And then right now it's in a loss. Win, 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 win. Loss. This was the same loss though, because the short closed. If you look at these numbers where the entries were, you can see it was this was the same position. It wasn't two separate trades. 30,379.89, 30,379.89, and then the close is the same. 31,443, 31,443. So that was the same trade here. So that was that one. I guess that was the most recent, the biggest losing short right here. I guess that was this recent one. Win, 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 win. Before that, its last loss was on, when was this? 6/18 for less than 0.5%. And then before that, it didn't take a loss. The beginning of Jesus. Basically the beginning of June for basically less than 0.5%. So yeah, those are its only losses. So yeah, it's doing really well. I'm probably going to make maybe some few. I might tinker with it a little bit. I'm kind of just boggled by why it shorted here. I'm going to have to look into the logic on this one. Maybe confer with Wes, the head of R&D over at Astrobit, to help me look into why this shorted so quickly after a long here. And the long was in profit. I really don't. I'm going to have to look into this. And that other trade back here too, right here. We had kind of the same anomaly here, except it was in the opposite direction. It was in a great short. And then right in the middle of the move, it longed. I mean, granted, this was a win, right? Like that short was a win. And this long miraculously, ended up being a win. This short ended up also miraculously being a win, even after a lot of drawdown. This one almost, I think this almost got stopped out here. Let me look at this. I think it was, oops, no, that's not right. Where is it? Here. No, it was under 2%. It looks so much bigger than it really is. Let's see. Yeah, so I'm going to have to look into that. So because this is the second time that's happened now. First time it's a fluke. Second time it's a coincidence. So I don't know. I'm gonna look into that though, but that's kind of odd. But in general, doing really good. I mean, for what? When do these backtest results go back to? It's not even backtest. This is all live. This launched on May 1st, and these results only go back to 5/10. So a month and 10 days after it launched. So I mean, in general, you know, for what? 5/10, 6/10. 7/10, a little over 90 days is about 80 days of price action, almost 40% spot profit. Can't really shake a stick at that. I mean, even if you're trading 2x leverage, you know, that's 80%. I mean, that's huge. So yeah, but I am going to be looking into this. That's kind of weird. I hope that this was really helpful for you guys. You guys, I know I try to be you know, as transparent as possible when it comes to the products that I offer you guys. You know, I mean, I know that as a trader, you guys are trusting me to have a solid technique that's going to trade automatically that makes you guys money. And that's why I try to be as transparent as possible. Some people do spreadsheets. So I started doing spreadsheets, and then people were yelling at me, "Oh, the spreadsheets can be faked." I was like, okay. So I did Coin Market Man, which like tracks the account. Like I have it tracking the account that I use for my Venom, like what the money that I have it trade for me. And people were like, "Oh, well, we don't know if that's Venom or not because you could just be trading that manually." I was like, okay, I mean, like, you know, you guys are kind of like, it's kind of ridiculous. The only other thing that I can do is physically show you the algo on the screen, and like, this is what's physically triggering the signals. Like, the signals physically come from this layout on my personal trading view. Like, that's as much as I can show you. I can't show you the risk management strategy. I'd be doxing myself. I can tell you what the hard stop is. Sure, it's 3.5%, but I'm not going to tell you what the stop loss stare is or the trailing stops. I'm not going to tell you what the indicators are. I can't show them on the screen. That's all I can really show on the screen is going back through the trades and doing the best I can to be as transparent as possible. So I'll update my website with these results and everything. And I'm also going to probably confer with Wes, the head of R&D from Astrobit, and kind of find out why that kind of anomaly has happened twice now. The first time it happened, it's an anomaly. But this is the second time it's happened now. So that might be some kind of a logic thing that maybe I can improve for later. But anyway, check out the links in the description below. If you guys want to try this out, you can get 50% off your first 2 months, which is huge. So definitely check that out. And go check out Cam Paulding, his YouTube. I don't think I have the video linked down below, but if you guys check my Twitter, he actually did a video on the Venom Algo and shows his own results and everything. I think he started with $600 and he's up almost $200 in like less than 90 days or whatever. And it's been just doing fantastic. So he goes through all of that stuff, how to set it up on BingX and everything. There's actually a referral code down there if you're interested in using a KYC free crypto exchange that you can also trade indices on, like the SPX, by the way. Go ahead and check that out. You can get up to a $4,000 bonus on that stuff. So I'm going to finish my beer here. If you guys want to see me either chug a beer or take a shot or something, let me know. I'll happily do that before the end of the stream, as we're just kind of, you know, shooting the shit here. But anyway, yeah, no, this was a good stream. I hadn't even really taken a look at the charts too much, you know, before today. So it's been nice. Love it. I love when you guys hang out with me. I really appreciate it. Make sure that you like and subscribe to the channel. I do normally do these streams every Friday now that I don't have any craziness going on with, you know, family in town. You know, did one tonight. Obviously, I'll do one on Wednesday next week for the FOMC meeting. You guys know that I love doing streaming the press conference and giving commentary on the press conference and everything. Love doing that. A lot of you guys really seem to enjoy it. Those videos actually get some of the most views out of all my videos, is like my commentary on the FOMC press conference. It's like wild. You guys really like it because like I really hate on, or I either really talk trash or really praise the people that are asking questions. And if it's a more complex question that the average person isn't going to understand because they're not super into finance or you know, don't have that much knowledge about global economics and stuff, I just provide some clarity on that stuff and kind of explain it in layman's terms. Like, oh, okay, this is what he's asking in general, and this is what Jerome Powell is, this is what he's saying, you know, that he's going to do or whatever, and just kind of, you know, make it a little easier for people to understand. Maybe that's why those videos get more views. I don't know. Most of you guys also usually watch the replays of this. I know that different time zones, there's a lot of subscribers that I have, not only for the Venom Algo, but just in YouTube on general, that live like overseas, Europe, Australia, wherever. And just the time difference, they just can't tune into the stream. So they normally watch the replays and stuff. But I have noticed that something like 88% of you that tune into the streams are not subscribed. So maybe work on that. But yeah, if there's no other charts that you guys want me to go over before the end of the stream, it's been a little bit over an hour now. I'm probably going to roll out at this point. Again, really appreciate you know, you guys tuning in, spending time with me on a Friday night. It's awesome. That's the whole reason why I do this stuff. And I know that I said this year I wasn't going to be slacking on my YouTube, and it's just, I'm just so busy. Like I really need to get on making some new tutorials, or at least updating like the tutorials and stuff that I already have, and really working on that, because I've been slacking hard on that. So I think that's probably what I'm going to start doing at the end of we're closer to the end of the summer, and just really start cranking out like a lot of YouTube content in terms of like standalone videos before the end of the year. I don't really get too many views on those unlike those Bitcoin analysis shorts. I'm probably going to still do those, but just leave them on my Twitter, and that's probably it. I'm probably not going to really be doing those because they're too short. You know, like you can't monetize on anything that's under like 5 minutes, so I can't monetize them. They're too short. They don't get very much engagement. So I'm thinking tutorials is probably going to end up being the way to go. But yeah, you guys are quiet. No requests for any fresh charts or anything like that. So I think I'm probably going to roll out. I hope you guys have a wonderful weekend. I will catch you guys on the flip side on Monday. And again, make sure that you subscribe because I do live stream the FOMC press conferences. So make sure that you guys check that out. So until Wednesday, have a wonderful weekend. Be safe, have fun, go touch grass, and I will talk to you guys later. Peace.